What would you do with the biggest check of your life? Imagine putting more than half into one new idea. An idea no one asked for, in a category that doesn't exist. Could you do it while every banker on Wall Street was laughing? And knowing 6 months later it would be working, would you sign it today? Palo Alto, 1999. This is Elon Musk. He is 27. He just made $22 million. He put 12 into a website. Not because he was reckless, because the math gave him one answer. It begins at 394 University Avenue, with a banking license. Previously on Elon, First Principles, a startup built from a sleeping bag on an office floor, $3.6 million in venture capital, and the equity that went with it, a $307 million acquisition. $22 million. Most people at 27 would stop, invest, play it safe. Elon Musk had a new whiteboard and a very different idea. It's 1999. A senior banker on the 42nd floor of a Wall Street tower, 20 years in finance. He's seen every confident young person with an impossible idea. He's just been handed a press release. A 27-year-old from Silicon Valley has announced he's building a bank on the internet.
A bank on a website where people are supposed to put their savings, their checking accounts, their mutual funds. He's going to learn a very expensive lesson.
6 months later, that website had 200,000 customers. 200,000 people had looked at a website they'd never heard of and decided to trust it with their money. In 1999, the banker stopped laughing, and the 27-year-old wasn't learning a lesson, he was teaching one. To understand how, you have to go back to the week he got paid, the biggest check of his life. February 1999. Compaq has just acquired Zip2, $307 million. Elon Musk, 27, walks away with $22 million. $22 million. More money than most people will ever see, and he had been thinking about what to do with it since before the deal closed. Most people would diversify, buy a house, $10 million in index funds, a vacation for the first time in 4 years. His advisors told him exactly that.
I appreciate the advice, but I didn't survive on $1 a day to put my money in an index fund.
He had an idea, not a small idea, not a side project, the kind that made people physically uncomfortable when he explained it. He wanted to build a bank, from scratch, on the internet, not a payments tool, not a niche product, a full-service financial institution on one website.
Banks are just ledgers, numbers in a database. There's no reason a building should be required to move a number from one row to another. The whole financial system is going online.
He called Kimball.
I'm starting a new company, online financial services, not just payments, everything, savings, checking, mutual funds, insurance, lending, all of it on one website.
Online financial services. Elon, people don't even trust buying books online yet. You want them to put their savings on a website.
That's exactly why we have to do it now, before anyone else figures out this is inevitable.
How much are you putting in?
12 million.
12 million out of 22, more than half.
If I'm not willing to put the majority of my own money in, why would anyone else trust it with theirs?
You just got this money, Elon. You could do anything with it.
I know that's why I'm doing this.
He wasn't being reckless. He was applying the same rule he'd followed since he was 12. Money isn't for spending. Money is for building the next thing. March 1999. He incorporated X.com. He leased an office at 394 University Avenue, a real address for a company that existed mostly as a whiteboard and a bank transfer. He hired a small first team, and then he did something no tech startup in Silicon Valley had ever done. He went and got a banking license, a real one, federal, FDIC insured, the kind of license JP Morgan has.
If we're going to ask people to trust us with their money, we need to actually deserve that trust. Not just the tech, the infrastructure. A payments app without being a real bank is a house on sand. I want to build the foundation.
A banking license is not like registering a domain. It takes months. Regulators audit everything: financials, leadership, compliance systems. Every major bank has a team of lawyers managing that license. He had a small first team. He was 27, and he wanted to compete with JP Morgan and Citibank. Not eventually, right now. The early days of X.com were chaos. They were building the banking backend, the web interface, the security, the compliance, the customer support, all at once.
It was insane. We were building a bank and a tech platform at the same time. Most startups build one product. We were building an entire financial institution. And he wasn't just managing, he was writing code. He understood the backend better than most engineers on the team.
Think about what 1999 actually meant. Most people still got bank statements in the mail. Online shopping was a novelty. Amazon was 4 years old. Elon wasn't just putting a website in front of a bank. He was reimagining what a bank could be: no branches, no tellers, no marble lobbies.
The entire financial system is going to move online. All of it. The only question is who builds the infrastructure that everything else runs on. I'd rather it be us.
X.com launched in late 1999, and the first customers were, predictably, terrified.
My husband showed me the website. He said, "You can open a savings account right here, on the computer." And I said, "Where's the bank?" He said it was FDIC insured, same as a real bank. I said, "That's what they all say." But then I saw the interest rate.
X.com offered a higher interest rate than most banks. No branches, no tellers, no marble lobbies, no real estate. The savings went straight to the customer.
We put in $500 just to try. I checked the website every day for a month. The money was still there, then I put in more.
She wasn't the only one. Within the first few months, X.com had 200,000 customers. 200,000 people had trusted a website with their money. In 1999, the bankers on Wall Street stopped laughing. But there was a problem. X.com wasn't the only company that figured out the internet could handle money. 4 doors down on the same block, another startup was building a tool to send money by email. It was called Confinity. The tool was PayPal.
They're not building a bank, they're building one feature. One thing: payments. It's clever, but it's not infrastructure.
He was right, and he was wrong. PayPal wasn't infrastructure, but it was something just as powerful: simplicity. It did one thing perfectly. eBay sellers started using PayPal, then eBay buyers, then it spread beyond eBay entirely. Confinity had the killer feature. X.com had the grand vision. Same customers, same market, same street, and they were at war.
We're spending money fighting each other instead of building. Both of us are burning cash on sign-up bonuses. We're racing to see who runs out of money first.
He was right. Both companies were offering sign-up bonuses for the same pool, both bleeding cash. Neither could outlast the other. Something had to give. Here's what this episode is really about. Not a 27-year-old who got lucky with a website, not a tech bet that happened to work. Elon didn't just invest in online banking. He invested in infrastructure, the license, the FDIC insurance, the compliance, the backend that could handle real money at scale. Here's the rule. First mover advantage isn't about being first. It's about being first to build the infrastructure everyone will eventually need. Amazon didn't just sell books online. They built warehouses, logistics, delivery networks. When everyone else wanted to sell online, they needed Amazon's infrastructure. Elon saw the same pattern in finance. The internet was going to eat banking. and whoever built the real infrastructure first would own the foundation. Think about your own money right now. A savings account, an investment app, a payment tool. Everyone is running on infrastructure someone built before anyone asked. The people who built that infrastructure didn't wait for permission. They built the thing the world was going to need, and then waited for the world to arrive. That's not gambling. That's seeing the future and putting a foundation under it. A builder bets on a structural shift others can't see yet. $12 million and a whiteboard full of infrastructure. He could have spread it across 10 ideas. He put it into one, because one well-built foundation beats 10 features built on sand. The financial rule from this episode: build the foundation. Features are temporary, infrastructure is permanent, and the people who build it charge rent on the future. You may not be building a bank, but you're building something, a skill, a business, a life. The question Elon asked in March 1999 is the same one available to you right now. He didn't know what the next year would cost him. He didn't know who he'd have to fight or what he'd have to give up to win. What he knew was that the foundation was real and necessary and early. 200,000 customers didn't show up for a marketing campaign. They showed up because the foundation was solid. FDIC insurance, real banking license, better rates. The trust was earned. If this is clicking for you, follow Budget Sketch. Next episode: X.com and Confinity at war, same street, same customers, and an ending nobody on that street saw coming. You won't want to miss it. X.com was winning, 200,000 customers, a real banking license, a full-service platform nobody else had. But Confinity was winning too. PayPal was spreading across eBay like wildfire, millions of transactions, a clever feature catching on faster than anyone expected. Same customers, same market, same street, two companies burning cash fighting each other instead of building. One of them had to go. What happened next wasn't a clean negotiation between two equal companies who decided to join forces. What happens next is not a negotiation. It is a survival decision, made under pressure he didn't choose, with consequences he didn't see coming, and a lesson that would take 2 years to land. That's next. Follow Budget Sketch and tell me, if you had 22 million tomorrow, would you put 12 million into one idea, or spread it across 10? Drop it below. Episode 6 is right here, the second time in his life he would learn the hardest lesson in business. Different company, same lesson, higher stakes. This is Elon, First Principles. I'm Alina. I'll see you there.